Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
It's a pleasure to be on the show.
Hilliard, the story making headlines in British Columbia is a report found that homeowners in BC have lost billions in home equity. They're blaming government regulations and the mortgage stress test. Is that the right place for blame, or would this just have happened anyway due to the natural cycles that real estate goes through?
I guess we'll never know if it was going to happen in the natural cycle. Certainly my research and my book indicate that it would have happened anyway, because the level of equity that had been built up in real property, especially in residential property, but in commercial property too, was so elevated that it couldn't be supported at those levels. And so whether it's a foreign buyer's tax or a transaction tax or a school tax or how many of those things you could find in different jurisdictions, the value of the equity would have dropped. For instance, in Saskatchewan, they didn't have any of those things, and prices in Saskatchewan have slumped as well. So it's pretty hard to convince Vancouver people that it wasn't a special thing that happened to them, but it really is not that special. The thing that's special about Vancouver, though, so far anyway, is especially at the expensive end of the market, in the the over $2 or $3 million level, is the extent of the drop. I mean, we're seeing prices dropping 40-50%, and we're not seeing that so much elsewhere. The prices dropping in Toronto are 5 to 10%, and in Edmonton and Calgary are 10 to 15 to 20%. But 40 to 50% seems to be a special case in Vancouver, West Van, Point Grey, places like that.
Which perhaps could illustrate that the foreign money coming in from China was the reason, and that money's dried up because of the Chinese government crackdown on money leaving the country.
Yes, and in Sydney and Melbourne, for instance, they're having prices, the total decline in prices in Sydney and Melbourne, Australia, is sort of reaching close to 20%, which is around 20% is when people start talking about a crash rather than a correction, although I've always felt it was more like 30% was the threshold between a correction and a crash. But it's so rare that prices would drop even 20% in housing that anything in that neighborhood is going to scare people quite a bit. And then once they're scared, as the Bank of Canada reported recently, if they expect prices to fall further, they're not likely to want to go and borrow $500,000, $1 million to buy an expensive home in Vancouver. They're just going to sit on their hands. And there's another factor in this that people don't appreciate as much as they could, which is the bankers get scared too. The bankers, their main risk to their business is lending money to people that can't pay it back. And when prices are rising, they don't really think about that very much. But when prices start to fall, that's all they think about is, is this person going to pay me back on this loan? And if the bankers get scared and the buyers get scared, then nothing happens, and then prices keep falling.
When people are operating in a situation of fear, what if you really have to sell your home? Who's going to buy it?
Well, there's an interesting thing. There was a book years ago, allegedly, with the secrets of one of the most successful legendary stock market traders of all time, called Jesse Livermore. He went from 1925 to about 1935 and was very successful even through the the crash in Wall Street in 1929. And he said one of the best times to sell, now he was talking about stocks, is when the peak is past and prices have started falling. And the reason he said it was a good time to sell was that there's always buyers that look and say, you know, that house that used to be, or that stock that used to be way up there, well, now it's come down, and it's a good time to buy. So in the early stages of the bursting of the bubble, there's people that are still thinking that it's only a temporary dip, and they're willing to jump in. And so that's one of the, according to Jesse Livermore anyway, that was one of the best times to sell a property now, or a stock. Now that doesn't last for very long, because if the downturn lasts for more than a couple of years, then eventually the fear spreads to everybody, and of course those bargain hunters get absolutely killed. So unless they have unlimited amounts of money, they can only do that once or twice, and then they're out of the game. So that doesn't leave anybody left. So, but it is tough. I mean, the thing, without the foreign buyers, without the money launderers, without the very wealthy people, of which there's not that many, as it turns out, there just isn't really much of a market for $3 and $4 and $5 and $10 million homes. It's everywhere in the world. It's really tough to find, and the only people that can afford those homes already own homes. So if they see that the prices are dropping, and they've already got a couple of homes, why would they want to add a third one? It doesn't. They too are human, and they're just going to sit back and see, hey, maybe these prices will keep dropping further. And so it gets to be. This is the epitome of illiquid investments. It's not like trading in stocks that trade millions of shares a day. This is you can get to the point in housing where in certain segments of the market there just aren't any trades, there aren't any buyers, and you just can't unload the house at any price.
We'll have more with Hilliard Macbeth right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the Pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, CIBC says their profits weren't as high as expected in the last quarter. Why?
They didn't highlight it, but if you read through it carefully, it turns out that they had to increase their provisions for losses on loans by 20%. So they had, now, I don't want to exaggerate this, they're not actually admitting that they're starting to lose money on housing mortgage loans. There was no mention of that in there, but they did mention a couple of commercial loans without saying which ones. They don't ever talk about specific loans, but they did increase their provision for credit losses, which is what they're required to set aside if they feel like a loan is not going to be repaid, by 20%, which is a big jump. So the stock is down 4% on Wednesday morning as we speak here. Which is a pretty big drop, and it's affecting some of the other bank stocks, but not by much. I mean, it's a very, very minor adjustment for a group of stocks that's been going up for 15 or 20 years pretty steadily. But it's one of the first inklings that there might be a crack in the solid wall of very low credit loss. I mean, we're at record low levels of loan losses in Canada, and it's because there's always people getting into trouble with their debts, whether it be divorce or illness or job loss or whatever, even outside of recessions. But as long as house prices are rising, it can all be, all the cracks can be papered over quite easily. the house gets sold and everybody's happy, including the bank. But once you get into 20-25% house price declines, and then if you get a recession, which is quite likely would follow, then that no longer works. So this is the first inkling of the start of what they call a credit cycle, where these losses start to accumulate faster than the banks can account for them. And then they start to have to take deductions from their profits, which is then shows up like it happened today with CIBC. And but they didn't. I read the whole transcript of they had their conference call with real estate analysts that follow the banks for the stock market, and there was really no highlighting of it at all. It was just in there, but the market noticed, even though the bank executives chose not to talk about it much. The market certainly noticed it, and the 4% decline in the share price is quite significant. And the market's down a little bit today. It's down maybe 1/3%, so that's a pretty significant drop.
When house prices are coming down, does it make it harder to get a mortgage?
Well, it's certainly there's a couple of things. There's the stress test that came in a while ago now, which requires that people prove that they can afford to pay back a loan even if interest rates go up by a couple of percent. And there's been other tightening measures that have been put in. But it's, to some extent, it's psychological. Like there were the lenders are human as well. And one of the things that happens when the downturn comes is the more aggressive people working for the lenders, they get fired because they're one of the things that happens is that some of the loans they made, the most aggressive lenders, those losses show up first, and so the people that made those loans get fired, and other people that work at the bank notice that somebody got fired, and they don't want to be fired, so they get even more cautious in terms of making loans. So it's, even though the bank's risk assessment is now centralized to usually to one office, the head office, the people on the front line there that are interviewing the borrower, they still have quite a bit of influence as to how they fill out the form and that sort of thing. And I'm sure all of them have become much more cautious in terms of filling out the forms. And then they also can go and advocate for a borrower and say, you know what, this is a borderline thing, but I think it's a really good loan. Let's do it. And their willingness to do that, to champion a borrower, is probably disappears pretty fast when house prices are falling. They don't want to stick their necks out. And it's a great career working at a bank. Eventually, 20, 30 years later, you get a pension, you get stock options, all that. Why would you risk all that in a falling housing market to make a bad loan? It just doesn't make sense. So, yeah, it does get a lot tougher to get, even if the numbers all add up, the perception is different, and people get more cautious.
We'll have more with Hilliard Macbeth right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, I saw a recent report that said the Western Canadian oil patch is actually awash in cash, but they have nowhere to place it. Is that true?
I haven't heard that myself, but there is a pretty good price in the world markets for oil, around $61 per and the spread had narrowed quite a bit. So at one time we were looking at Western Canada prices being $20, $30, $40 less than the international price, and now the spread is down to about $15. So, which is basically the cost of shipping the oil by rail to the U.S. So, yeah, I imagine some of the companies are doing pretty well at these prices, but the outlook is challenging. Without the increase in volumes from Western Canada has been pretty steady for many years now, going back to 2003, 2004, when they started building those oil sands plants. And there's developing quite a glut of oil in the U.S. where the only place they really have to ship it to is the U.S. And we as people know, I'm sure, we produce way more oil in Western Canada than we need. So we got to sell it somewhere else, and the ability to ship it has been restrained by lack of pipeline capacity. So yeah, they might be getting good prices for what they're shipping, but if they're sitting on cash, if that's true, it's probably because they're not reinvesting back into the business, because it doesn't make sense to invest a bunch of money if there's no outlet for the product that you're producing. And of course, being a depleting resource, you have to keep drilling more wells or developing more plants or doing all that to keep the oil production going. So I'm sure they've got one eye on Texas and all the new oil that's coming out from the Permian Basin in West Texas with the fracking.
Well, Texas also has a problem of lack of pipelines. They're discovering all this new oil, and they're finding it hard to get it out, and they're now venting and burning off the same amount of natural gas, apparently, that would power all the homes in some states. Yeah,
the all of that, and it's very light, sweet crude that comes from the shale. There is gas associated with it, I'm told, and it's a problem. They've put it into storage. They've done all kinds of things. There's different regulations. Texas is renowned for being a light regulation place, but I think I suspect that they're still not allowed to just flare it into the atmosphere. But there are pipelines being built. Kinder Morgan, the famous Kinder Morgan from the Trans Mountain expansion in Canada, the parent company is headquartered in Houston, Texas, and they're the largest transporter of these sort of things in the U.S., I think, and they've got a whole bunch of expansion projects underway. And down there, it doesn't take very long to get approval, and it doesn't take very long to build. So I think I don't remember exactly, but I think it's by the middle of this year or by the end of this year, several new pipelines will be completed, and the bottlenecks will start to get worked out. And they've got so much, they have to export it as well, but they're building ports that can handle the largest crude oil carriers of 320,000 deadweight tons that will now soon be able to land at offshore Texas there and head out into the world with a bunch of oil. So, but it's, they could have too much there as well. It's another day we should talk about the OPEC and what they're going to do, because it's a very volatile and fluid situation. It could change very dramatically, especially if there's a slowdown in global economic growth, because the demand for oil is very sensitive to how fast the economy is growing.
Also, they said 4 tankers were attacked in the Strait of Hormuz, but there's no video evidence of it, and everybody's got a video camera phone nowadays. A lot of people are just saying this seems to have been a faked incident to provoke the U.S. into a conflict with Iran. And if there is a conflict with Iran, is there enough Iranian oil around right now that if it was removed from the market, would it make much of a difference?
So the Iranian oil production they were restrained for years because of the sanctions. Then they made a deal, and they were allowed to increase. And OPEC allowed them to increase. Iran, by the way, was one of the founding members of OPEC. they allowed them to increase. I think they were getting up to 2.5 to 3 million barrels a day from very low numbers. And now with the new aggressive attitude from the U.S. and the new sanctions, they're going to be restricted back down to 500,000 barrels. So there's potentially another couple of million barrels of lost supply there. But between Russia and the Saudis, they could easily make that up quite quickly, I think, and all the new stuff that's coming from the Permian Basin. So I don't think Iran alone would be enough to, and Iran seems to have a really good, outside of, a complete war breaking out, in absence of a war, they seem to be able to find ways to ship the oil and get around the sanctions. They've been pretty good at that for quite a long time. So, I don't know. I've watched this for years and years, and occasionally some country being taken offline will cause the oil price to go up for temporarily. But it always seems like people find ways around it and come up with new supplies, and the shortage doesn't last for very long, and the price of oil comes back down again. So I wouldn't bet a lot of money on that conflict with Iran, unless it turns into an all-out war, of course, causing the oil price to spike back up to $100. But I have seen predictions of that, so I guess anything's possible.
Tesla, are they in real trouble, and could they disappear?
I don't think Tesla could disappear. One of the reasons that people are talking about Tesla being in trouble is that the stock price has gone from, I think it hit a peak of 360 or 380, and in the last couple of days here it's gone below 200. So that's getting up to a 40-50% decline from the peak. And people will remember that Elon Musk got into trouble with the SEC for saying that he had a buyout offer to go private at $420, and funding was secured. And the SEC didn't like that. It was wrong of him to say that. He got chastised. And so now it's down below $200. And there's the concern about the demand for cars. It's not just Tesla cars, but demand for cars generally. Mercedes had a huge decline in the number of cars they sold. BMW is suffering. Volkswagen is suffering. Everybody's suffering. The numbers in China are astounding. The drop in car sales in China, and it's hard to know what it is. Whether it's a global economic slowdown, or whether it's it could be that people are confused, thinking that maybe next car would be an electric car, but the Teslas are still pretty expensive, and there aren't that many other offerings out there. So people are kind of hanging on to their current car for an extra year or two. But whatever it is, there's a lot of challenges right now. But they did a fundraising, $2.7 billion. They had, so now they've got close to $4 billion in the bank. I think they won't have any trouble making it through this next few months. And very soon their China factory will be producing. They started constructing it in January. The building is basically almost complete. As of June, it'll be complete, and they'll install the assembly lines in that, and they expect to be up and running by September, October. So, and I don't think there's any lack of demand for electric Tesla cars in China. One of the things about China is they have an incentive. They've got an incentive to buy electric cars, and they've also got a big restriction against buying combustion cars. It's really hard in the major cities to get a license to operate your car if it's a combustion car, but if you have an electric car, you go right to the front of the line in the lineup to be awarded a license to operate a car. So, and also I think that there's quite a bit of prestige involved in having a Tesla car in China. So I think once they get up and running on that factory, they should be doing well again. People have been predicting the demise of Tesla for a long time, but it doesn't seem to happen. And I suspect there's rumors that Apple might be looking at trying to buy into Tesla. There'd be other technology investors that would be interested, I think, if the price got low enough. So I don't think Elon Musk wants to sell any shares, but I suspect there's people lined up that would buy shares if he was reluctantly forced to consider it in terms of a survival move. So, although I don't know how the new investor would get along with the CEO. I don't think he's used to taking any direction from anybody. So that might be a problem.
Yeah, he doesn't even like taking directions from the FCC.
Exactly. So I think that would be one of the issues. If Apple or somebody tried to take Tesla over, what would they do with Elon Musk? That would be the biggest concern probably that they would have that might hold them back from making that move. But given the head start they have, given the cars they have, I would never bet on them disappearing. But I think it is possible that they might have to take in new partners or new investors or something like that to make it to the next stage. But the next stage is pretty explosive in terms of if they can get the cost of manufacturing down to a little bit lower and then come out with the SUV vehicle, the Model Y as they call it. There really isn't anything holding them back at that point.
Well, in America, people do not want to buy sedans. They want to buy SUVs.
Exactly. And that's why they announced the Y, they call it, which has got... It's interesting, you know, the 3 has 15 cubic feet of cargo capacity. The S has got 30 cubic feet, and the Y has 60 cubic feet, which is just a huge... I mean, it's just mind-boggling how much... Because I've got an S, and it's got so much space in it, because you got the front, the trunk in the front, then you got the back, got tons of storage room to carry stuff. So doubling that is just hard to imagine. So I don't think they'll have any trouble selling that if they can make it. Now that model is not expected to be in production until the end of 2020. So they're going to make it through the next 12 to 15 months, kind of thing.
Mm-hmm. Well, the biggest reason people tell me they like their SUV is they can see over traffic. Simple as that. It's not how much they can carry.
Yeah.
Hilliard, thank you so much for chatting with us.
Nice to be talking to you again. My
guest has been Hilliard Macbeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.